All right, welcome. Today, we are going to tackle a really confusing signal that's popping up in the markets. What it could mean for all of us is pretty fascinating. So let's just dive right in and break it down.
Okay, so let's kick things off with a bit of a puzzle. On one side of the rang, you've got riskier assets like Bitcoin, and it's bouncing back hard. We're talking nearly 10% up from its recent lows. But then, on the flip side, you have gold, the classic safe haven, and it's trending down? So, what in the world is going on here? This contradiction, it's really the core of what we're talking about today. It just makes you wonder, right? What single force out there is powerful enough to pull two huge but totally different markets in completely opposite directions?
And the answer, as it so often does, really boils down to one major player, the US Federal Reserve. Seriously, all eyes are glued to the Fed right now because every single decision they make, it sends these huge ripple effects through literally every asset class you can think of.
So this week is absolutely crucial. You can bet traders are on the edge of their seats, just waiting for key economic data to drop. Things like retail sales, producer prices, the weekly unemployment claims. And why all the suspense? Well, because these numbers are like breadcrumbs, leading us to what the Fed might do next with interest rates.
Yeah, and the market isn't just sitting around waiting. Oh no, it is actively placing its bets. In fact, if you peek into the futures markets, traders are already pricing in more than a 60% chance that the Fed is going to have to backpedal, pivot, and start lowering rates pretty soon. Which brings us to this really fascinating theory from a top strategist over at Bank of America, a guy named Michael Hartnett. He's got this idea he calls the Capitulation Thesis, and it's basically his explanation for what could be just around the corner. So, Hartnett's whole argument is pretty simple, but it's really powerful. He thinks that sooner or later, the Fed is just going to have to give in, capitulate on its tough stance against inflation and pivot its policy. And the moment it does, he's betting that the most speculative assets, things like Bitcoin, will be the very first to scream that the shift is happening. Okay, but to really get why the Fed might be getting backed into a corner like this, we've got to look beyond the US. The pressure isn't just domestic. It is building up in a big way in other major economies, and Japan is a perfect example. Just look at the sheer scale of the stress here. Japan's government bond market, it's having its worst year in decades. The yen is collapsing. This puts Japan's central bank in a totally impossible spot. And because everything is so interconnected these days, that kind of instability over there puts a ton of pressure on the US Fed to step in and stabilize things, which could mean easing up on its own policies. And you know what? We've seen this movie before. It's a perfect example of history rhyming. Think back to late 2018. The markets were hurting, big time. But the instant the Fed gave in and signaled that pivot in December, that marked the exact bottom of the bear market. And what followed? A huge rally in early 2019.
All right, so let's piece this together and see how it all points to this central idea that Bitcoin could be acting as the canary in the coal mine for the entire global market.
The whole theory really hinges on this idea of the vanguard of liquidity. It's a fancy way of saying the most speculative assets, the stuff that's way out on the risk curve, at the tip of the spear. Because they're so incredibly sensitive to how risky investors are feeling, they're the first ones to jump when it even looks like central banks are about to open the floodgates and pump more money into the system. And check out this data on institutional allocation. Crypto is just a tiny sliver, 0.4% of their portfolios. Because that slice of the pie is so small, even a little bit of new money flowing in can have a massive impact on the price. It's this extreme sensitivity that could make it the perfect early warning system for a shift in Fed policy. But hang on. Before we get too carried away with this theory, it's not a total slam dunk. The picture isn't perfectly clear. There are a couple of important counter signals in the data right now that are basically telling us to pump the brakes a little. First up is something called the Coinbase Premium Index. Basically, it measures if US investors are buying or selling Bitcoin more aggressively than everyone else. And lately, that index has been negative. And that tells us that, at least for now, more of the selling pressure has been coming from right here in the US. Okay, the second warning sign is a bit more technical. It's known as the CME gap. So, the Chicago Mercantile Exchange, the CME, trades Bitcoin futures, but it closes for the weekend. If the price of Bitcoin makes a big move while they're closed, it literally leaves a gap on the price chart when they open back up on Monday morning. So here's the kicker, and this is the really crucial point. Historically, something like 95% of these gaps eventually get filled. That just means the price has a tendency to go back and revisit that empty space on the chart. And wouldn't you know it, a pretty big gap just opened up below the current price. Statistically, that suggests we might see a little dip before any big rally can take off.
So we've looked at the main theory, we've looked at the warning signs. What's the bottom line? What's the key takeaway? What should you actually be watching for from here? Well, according to this theory, here's the chain of events to keep an eye on. Step 1. Watch for that global pressure, like what we're seeing in Japan, to keep building up. Step 2. Listen for any hint from the Fed that a pivot is coming. Step 3. Look for signs that liquidity is starting to flow back into the market. And then Step 4. Watch Bitcoin. Does it react first? Does it become that leading indicator for everything else?
And all this really leaves us with one final big picture thought to chew on. Is it possible that what we're seeing is Bitcoin evolving? Maybe we should start looking at it not just as some speculative asset, but as something more, like a key real-time signal for what's coming down the pike for the entire global economy.
So, if you found this breakdown helpful, do us a favor and hit that like button and subscribe so you don't miss the next one. We'll see you next time.